Good morning, everybody. Mike Vacchi, Princetontrader.com here for ntmarkets.com with your Monday morning pre-market webcast. Okay, so daily chart of the ES, and if you watched the evening recap last night, the issue was, can the bears stay below the middle Bollinger Band here, which is the green line, turn that into resistance and push lower? We definitely have the beginnings of that in Globex. Now, here's the key for today. Can the bears put an entire day together? They have not put an entire day together in over a month. And what I mean by that is, when we get this weakness off the open, when we get that little pop, but then go back down and retest those lows or make new lows, are the bears then going to be able to take that next push and make that a lower high and start to stair step down, versus letting the bulls have 10, 15 handles and turn a pretty promising red day into a candle? Like that, or like that, like that, okay? These two candles, that dynamic, which established 1670 as the floor, is what got the last 35 handles of problems started for the bears. So now that we've retraced 30 handles of that, because our overnight low is what? Yeah, 75.25. The bears need to push. Now, I would be very wary of a move straight from here to 1670, because I don't think that kind of a move is sustainable. I think that kind of a move is a buy, because you'll have seller exhaustion by the time you get down there. But if we continue to see a grind over the next couple of days, and a test of 1670 and perhaps a retest, then it could break lower. You've got very tight Bollinger Bands here, and that volatility expansion after the contraction could push things lower. So the next couple days, do we just drop straight down to 1670, in which case I think the dip buyers come in? Are we now going to trade between the middle band and the lower band, which is what we were doing here? Let me zoom out one. Before the big flush, the market had decided back in May that it wanted to trade between the middle band and the lower band. That's indicative of weakness. Tried to get back over the upper band, and when it couldn't do it, when it broke back through, that caused the real flush down there for a few days, down to 1553. So the targets I was giving last night is, the reasonable approach is not that the world's going to end, and the reasonable approach isn't that the market goes up every day like you hear some of these people say. The reasonable approach is a 38 to 50% retracement of this smaller move, somewhere in the area of 1647 to 1629, if the bears can break 1670 and close below it in the next couple of days. So that's kind of the lay of the land. So everybody have a fantastic trading day. Mike Vacchi, Princetontrader.com. Check out the website. Check us out on Twitter at Princeton Trader, doing charts every day. Check out the chat room. Trade live with us every day. Take a 2-week trial. Come and see if it's right for you. We'd love to have you. I will be back tomorrow morning with another webcast. Trade them well, everybody.